And what do you get? There's a draw feature on here. I've used it, but I forget how you get to it.
I am not sure. I have never had experience with that.
Yeah. Yeah, I didn't know about it. It was one of the Zooms I did probably a month or two ago. And whoever was the tech support had it down and showed me how to do it. It was actually pretty helpful.
Yeah, I could do some research on it.
Oh, it's okay. I can go with that. Usually, if you're a good speaker, then and you're clear,
exactly.
It's not.
Hang on one second there, David. Sure. I just want to welcome everyone as they're coming into the Zoom room. We are live, and we do have David Morgan on cue here for our presentation coming up right at 1 promptly. I just want to welcome everyone as they're making their way into the Zoom room, and we've got David Morgan coming up next. Once again, just welcoming everyone who's coming into the Zoom room right now. Up next is David Morgan on silver. Is this the breakout year? We'll be getting started in just a few minutes, right at 1 o'clock sharply. If you have any issues with the browser, make sure you're using Google Chrome and turn up the volume right on the video player there. And we'll be getting started in just a few minutes. Alrighty. David, can you hear us okay?
Yes, I can.
Excellent. I'm going to stop sharing my screen and go full screen on you as well. Did you want to pull up your screen right now, David, or do you want to do that throughout the presentation?
I'll bring it up right now. Let's get it where it's right. So share screen.
Yep.
I'm going to go that one, and I'm going to hit share, which I always forget to do. So you should be looking at a chart of copper right now. Is that true?
Excellent. Excellent. I can see it.
Okay.
Excellent. All right, David, I'm going to offer you a brief introduction in about 30 seconds, and then the stage will be yours. All righty. Welcome, everyone. Thank you for coming to the Money Metals and Mining Virtual Expo. We are delighted to welcome our next speaker to the stage, David Morgan, who's the founder of the Morgan Report. Started investing in the stock market well before turning 18 years of age. Several years ago, he put his long study of the free market economies to work researching the economy, stock market behavior, and precious metals, especially silver. Although very familiar with gold, Mr. Morgan believed that silver needed more exposure and would be utilized increasingly as technology continued to demand more and more of the metal. He has followed the silver market daily for over 30 years, and much of the silverinvestor.com site is devoted to education. David, it's an absolute pleasure to welcome you. The stage is yours.
Oh, thank you so much. The title of this presentation is this the breakout year? Referring to silver, and it's a rhetorical question. It is a fact that silver's breakout year was in 2020. And I'll get to the silver chart here in a minute and make a pretty good case for the breakout being last year. And I guess the subset is this the breakout year? Will this breakout continue in 2021? And from the data that we have as of the first quarter of 2021, all indications are yes. So let me start off with something that I dug out of my files for a long time ago. And first of all, thank you to the Money Show for asking me to be a presenter. This was a letter I received, and I don't have the date, but based on the prices in this letter, I'm going to guess it was around 2002, 2003. Mr. Morgan, I enjoyed your newsletter excerpt of February 12th, which I found on the Kitco website. You stated perfectly some key reasons for silver's problems in getting out of its own way, and your call for further weakness was precedent. I guess I'm part of the problem. I've traded COMEX futures actively from the pit for over 15 years. Over the years, the amount of futures contracts that we've traded has surely dwarfed the actual physical market, making it difficult for silver to manifest its true fundamentals. As you alluded to, quote unquote, Groundhog Day, again on the trading floor. Over the past month, I watched one fund accumulate an eye-popping long position, and I followed its progress as best I could through open interest and commitment figures. When prices started slipping away from last week's test of the 485 to 490 level, I could hardly believe my eyes when I saw early evidence that this fund was starting to sell. I went across to the pit to a trader whom I knew was trying to stick with his longs, and I said, quote unquote, I've got bad news for you. That selling you see over there, it may take 3 weeks, end quote. The fund sold heavily all last week. The usual bank traders were sopping it up, secretly relieved, I think, that prices has failed to break into ground that they could not control. The younger traders ask me how these funds can keep getting chopped like this. They don't realize that a 30-cent chop in silver is a minor inconvenience compared to the strong positions most of these guys have in gold and crude. As you know, the banks will continue to play puppet master as long as the silver game remains quote unquote closed. The banks know the upper parameters of the fund's buying power. The banks know when the funds have reversed themselves into an untenable short position. It will take new players to get the Bill Murray silver market out of this loop. Certainly, investment demand is the wild card that banks and recurrent short sellers cannot control. Silver will be called lower on Tuesday morning, and although I'm a bull, I'll be getting short on the bell. There's no short-term success in getting in the fund's ways. Again, thank you for your insight, a COMEX floor trader. So you can make of that what you will. It's been going on for a long time. I wrote about it in the Silver Manifesto. But let's get on with the presentation here and talk about. Now, I got copper up here for a reason. Copper is supposed to be the leading indicator for physical economic health. So if you have a strong copper price, many call it Dr. Copper. It's got a PhD in economics. These are all metaphors or analogies. And that portends a strong recovery, strong economic conditions. I certainly won't argue with the fact. The fact is that copper has gone from 210 in April 2020 up to as high as 430 in 2021. Obviously, a huge move up. All looks parabolic on this chart. And it's all well and good. But my take is this is not an indication of robust health in the global economy going forward. It's more of an anticipation of the electric vehicle market, which will put a bigger demand on copper. However, the way things are slowing down, the supply chain situation, the war, rumors of war, all this going on in the geopolitical sense, I think this is overdone. But I always let the market tell me. I never try to tell the market anything. So it's still bullish as long as you remain above this moving average of 404, and we are. But I don't think the fundamentals are what's driving it. I think it's more speculative. So gold, I think I'll come back to because I'm going to focus on silver. This is the HUI. As you can see, the Huey is kind of in no man's land. It's above the 50-day moving average, but it's in the middle of the 50-day and the 200-day. It's kind of just biding time. It's good. It's broken through the 50-day. That's a positive sign. And we could be entering the next phase up. And the reason I say that is silver hit 24 a week and a half ago or so and bounced up to 26 in about 3 trading days. So it's showing some strength. So here we are in the silver market. And I'm only going to speak for about 15 minutes. So I've got about 10 minutes to go. I'm going to open this up to questions. So everyone that, has any questions, particularly on silver or the economy, certainly get them ready because I'm here actually for you. I will obviously make some comments. I want to change the chart a little bit here if I can, and I can. Okay, let's go for that. All right. Now, this is basically the chart of silver from the inception of the bull market till present day. And silver started the up move after gold. Gold started basically in the year 2000. Silver actually didn't start until September 2003 at 555. You can see it kept bouncing off that 555 level. In September of 2003, it hit that level, it came up, it tested it one more time, and then it took off all the way up to like $8 or $8, $7.80 if I remember correctly. Then it recoiled back and then moved up. So we've had really, from my perspective, we've had 2 legs up and 2 legs down. And what that means is we have one more leg up, and it will be very, very important to be in this market at this time. So let's see if I can get this to work. No, it's not. Okay, I was going to try to get some annotation in here, but you can follow my cursor pretty well. So we went from 555 basically up to 21, down to 9, 9 to 48, 48 down to 12, and 12 to where we are today at 25 or so. So one leg up, 555 to 21, 21 down to 9 during the financial crisis, 9 up to 48, and down to that spike low for one day, $12 last year. So the last leg of any market has the greatest potential. And it's true in almost any market. If it's a real estate market, stock market, any market pretty much exhibits the biggest push at the end of the bull phase because of several things. First of all, the reporting on it, people know about it. Secondly, the fear of missing out. Third, it's kind of the in thing to do. You want to be in the, crypto market. They're all moving. So they kind of feed on themselves. And so I came up with the idea. Actually, I took the idea from Jeff Christian from CPM Group. He made a speech probably 15, 20 years ago. And he said 90% of the move comes in the last 10% of the time. And I thought about it. I said, yeah, I think he's right. So I did a quick study. It's on the internet somewhere. You can look it up. It's on my blog, but you have to, better to Google it and try to search through the blog. There's, I don't know how many videos I've done over the last several years. But in 1979, silver started at $6. In January of 1980, it was at 48.50. So 6 times 8 is 48. It was an 800% gain in about 10% of the duration of the bull market. I think we're going to see that again. Is it exactly 90%? Is it exactly 10%? No. The idea being that it's poised to do quite well, and it's probably going to do it in a reasonably short length of time versus what we've seen with this. Basically depends where you start. The starting point, I said September 2003. You can argue with me if you want. You can say 2000. So 21 year bull market, bull and bear, but it's still moving up, and I think it will continue. So this phase here, where we went from the crash of the financial crisis at 9 all the way to 48, that went from, as you can see, 2009 to 2011. So that up move took not that much time. It wasn't a matter of weeks, it wasn't a matter of months, but it was, what, 1.75 years, something like that. We're probably in something similar to that. The point I want to make is that, generally speaking, rule of thumb, no guarantee, but often is the case that this move on the second leg up from 9 to 48 is usually doubled in the next one. So if you round it up to 10 and you go to 50, that's a 5-bagger. So if you double that, you go to 12 and you use 10, you've got 120. Now, is there a guarantee for that? No, of course not. But again, historically, that's kind of what happens. And we'll get into why that's probably the case here in a while. So back to 2020, why that was the breakout year. The breakout year of 2020 was basically led in January 2020 at the World Economic Forum, in those days better known as Davos. And Davos was a had all the, the elite, I guess we call them there, lots of financial people and political people and all that. I think most of you on this presentation know what I'm talking about. So there was an interview by Bloomberg Finance with Scott Maynard, who is the chief investment officer of Guggenheim. And the Bloomberg gentleman asked him what was his go-to, his conviction trade of 2020. And he said silver. And you could tell by the body language, or at least my interpretation was, that this Bloomberg guy kind of fell back in his chair and said, silver, why not gold? And Scott said, because silver is so undervalued relative to where its high is, and gold is actually pretty near its high. And so he made the conviction trade silver. Silver obviously went from 12 to, I forget the closing price, I think 28, closing out the year 2020. It made a nice run, in other words. But, I can make that statement and it's accurate, but it was a one-day spike low. So, I mean, you could go from 28, you could use something more like 14, which is more realistic for the amount of trading days, and you could go up to 28, so it doubled. But she doesn't want to double their money every year, but obviously all markets go up and down, and silver doesn't perform like that every year. So right now we were in a congestion area, and really to get further up in this market, we need to get somewhere around 28 or so. Let me dial in on this chart a little bit. So I'm coming up on about halfway through this presentation, and I'm, as I said, going to open up for questions. So again, get your questions ready. So let's see. So right now, this is an art, not a science. I'd say that's about the top of the market right now, which just happens to come out to 28 exactly. You can argue because, again, it is an art. But we're locked in a trading range, basically, between, I'll call it 28 and I'll call it, 22. Now, right now, where are we? And of course, you can see that we're above the 200-day moving average and have been above the 50-day moving average, which are both signs of strength. But we also can see that the volume here has been average. It hasn't been that strong. The way you get big moves up is when you see these big moves in volume. Everything about the markets is about volume, how much pressure there is to buy or how much pressure there is to sell. And you can see back here when silver went from this level of 17-ish all the way up to, say, 28 again. You can see all this buying pressure, much bigger volume than normal. Now, the gray means buying and the red means selling. So it wasn't like every single day, constant buying pressure. But if you look at how much gray versus red, you will see that the buying pressure was more significant than the selling pressure, and therefore you got out of the market. So right now, I'm not going to get too excited about the silver market until we get above this 28 level. And the Morgan rule that I've established for years is, again, the market knows more than anyone. So my core position really doesn't change. I just add to my core position. But in my trading position, which I don't do very often, so if you join the Morgan report, please don't think you're going to get a trade every week or even every month. Sometimes the last trade I did that was big in the silver market is I bought it at 19 and got out at 48. And I had a lot of people retire on that trade. But anyway, here we are. And that trade, by the way, would be like a year and a half, like I showed you a minute ago. So we are consolidating. It's part of how markets work. It's boring. It doesn't make any sense with the amount of physical that's being drained off the COMEX, the amount of physical that's going into people's hands, the amount of unallocated. And in some instances, I don't want to exaggerate it, but in some instances, it's pretty well verified that they're unable to meet the physical demand and settling for cash. There's a lot going on. So I've gone 1 minute over the halfway mark. I'd like to go ahead and open it up for questions and see, what I can do to help people.
Absolutely. David, can you hear me okay?
Yes.
Excellent. Lots of questions. Let's jump to our first question here. So Richard asked, are silver mining stocks worth considering as well? I assume the answer is yes.
Well, first of all, I've been pretty consistent here. I think I have. I've always maintained that you should have physical metal first, and then the best leverage you can get is in the mining shares. And there are times when the metal itself actually outperforms the shares, and it does happen. Right now, we're sort of in that position. Shares haven't really done that well, which is really infuriating if you know stocks, because stocks purportedly are based on earnings. And the gold stocks have great earnings. Their earnings are like super good. And yet their share prices are down. But there's kind of this lull in the market. I think a lot of attention is into the S&P 500, what's going on with the benchmark 10-year treasury, what's going on with Bitcoin. There's a lot of, I'll say, other areas of finance or investing that people are concerned with. And gold and silvers, most people kind of worn out by the story. If they've heard it, they really aren't sure that it's worth it and all that. But on the stock side, yes, there will be a day, I believe, when we get that third leg up to really move, which would be, as I'm showing here, at the 28 level. And by the way, I don't know if I gave you the Morgan rule completely. It's got to be above that level 3 days in a row on above average volume. And if that happens, then I buy and go long. You have about an 80% chance of success doing that. So when that happens, you could be, let's say, at 29. So it breaks through 28 on big volume. It goes to 28.50 on bigger volume, and it goes to 29 on good volume, but not as big as those first 2 days, but still above average volume. It doesn't have to be above average volume every day, but you want above average volume, at least 1 or 2 of those days. And Excellent. Then you're in. And again, that provides a lot of comfort from getting whipsawed. So anyway, once it does that, I think we're again on our way. So the shares give you leverage. There are only a few handful of really good producing silver stocks, First Majestic, Pan American. Silver Wheaton is a streaming company. It's not Silver Wheaton, it's Wheaton Precious Metals now. I'm involved with a few that are for a private service. There's one we're going to do a private placement on that's over in Montana. Myself and David Smith will be going over there and checking it out. I don't want to talk too much. I'm sure those are the questions. The other part is to mention, I wanted to, that David Smith will be doing a presentation today as well. It'll be all about this new technology that I'm involved with, and many of us are, to bring a new methodology for basically precious metals mining, or mining in general. So you definitely want to see David Smith's presentation. I'm ready for the next question.
Excellent. One of our viewers writes in, years ago, you touted the demand for silver related to RFID chips. How much non-recyclable silver is consumed annually by RFID chips?
I don't know the answer, but I probably should look it up. It's not that hard really to figure out, I don't think. I'd have to give it some thought. Right now, roughly 160 million ounces of silver is recycled. And how to break out specifically the RFID tags, I really don't know. But it's not in that level at all. I was wrong when I think I wrote that first article. I was off by an order of magnitude. I had 10 times more silver being used than actual when I wrote that article. Now, have RFID tags gone up by 10 times the amount of usage? Probably. I'm not trying to make an excuse for myself, just being gut honest. But I don't know is the answer. But we do know that a great deal of silver does end up in landfills. And really, as this question implies, or the way I understand it is, so little silver in an RFID tag. How do you recycle that? The answer is you really don't. So I don't know if we'll get to a point where that part of the market will be recyclable. I won't say no, but I doubt it for some time.
Excellent. Thank you. Do you anticipate a stock, housing, or economic drop before or concurrent with the run-up in precious metal prices?
Well, normally what happened, and history is a pretty good teacher, is on a sell-off, everything goes down, including gold. Most of your fund managers and family offices and smart money, big money, managed money, they all have a gold position, or most of them do, and it's leveraged to kingdom come. So when the general equity market starts falling down rapidly, they will sell their gold positions because they probably have a profit in it. And once the dust settles, then the golds are the first to recover. That's exactly what happened in 2009. We saw silver trading at $9 on the futures market, but 13 in the physical market. There was a huge rush to silver. Some people make fun of silver investors if they don't know what they're doing, but the idea is wrong. And from my experience, a lot of silver people are pretty savvy, and a lot were buying silver at that low, that $9 low. But they were buying what they could, which is retail. It was a large markup, just like we're experiencing now.
Excellent. Thank you very much. Which silver ETF is better in your opinion, SLV Sprots or the miners ETFs?
Well, I'm more partial to PSLV, but the miners ETF I think is okay. I haven't looked at it in a while. We don't do a lot with ETFs. We do, especially when I do the videos in front of the paid members, like I'm showing you kind of on this chart over here. And I'll make recommendations. What I'm really big, mostly we stay on the equity side, which you could call an ETF the equity. It is, but we are more oriented toward picking good stocks. But you can certainly use the ETFs. David Smith covers that a little more than I do, and we do usually once or twice a year go through them. But I am not favorable to the SLV, and we did a huge, a sufficiently long presentation in the Morgan Report 2 months ago on the SLV, pointing out what the contract actually says. And if anybody reads that, you would not participate in the SLV, in my view.
Thank you. Our next question is, technology is continually reducing the amount of silver needed in solar, but the volume of solar panels may outpace the decline in per panel needed. How do you see the potential for solar and EV demand impacting overall silver supply and demand?
Good question. I haven't done this in a while. I started the study. It's not really that hard to do. Anyone common sense can do it. But I looked at, is there enough silver in the world to go solar for the world? The answer is not even close. I think if you took all the silver available and doubled the efficiency of the silver panels right now, it will power something like 5% of the world. So you can't do it. Will there be a push toward it? You bet there will. But is it an answer? No, unfortunately, it's not. It could, and there are places that, having solar is beautiful, wonderful. I mean, if you're very far from the grid and you need to power stuff, and using solar is wonderful, especially if you have a balance between the panels and the batteries, and, it's all well and good. I have nothing against that. But what I'm trying to point out is a lot of people that are, fairly green, which is fine. I'm for being good stewards of our resources. But the truth is, unless you get, and I'm not going to rule it out, but right now, no, you couldn't do it. I will have to add that, is it possible? And I basically indicated no. I want to take that back a little bit. My predecessor, Jerome Smith, built a great case for silver going to $200 an ounce in 1995. And it took me, I read the book, I think one of his books, he has several, about 3 times to figure out what his mistake was. And what his mistake was, a new technology came along and drastically increased the amount of silver production. So, I can't rule that out and just look you in the eye and say, as far as I could tell with the data I have now, it's doubtful.
Thank you very much. What is your opinion on BlackRock silver, if you have one?
I really don't. I think I'll pass on that one. I mean, I've got a general feel for BlackRock, but I really don't want to comment.
Excellent. Thank you. Do you think there will be another pullback before we break out above the 28 level?
That's a great question. Right now, we're in this squeeze. You can see on the chart I've left up that the 50-day and the 200-day moving average are converging. And usually in that convergence, you get a breakout up or down. But again, the market knows more than me. So if we get a breakout up, then the market is saying I'm going higher. If we get a breakout to the downside, the market is saying we're going lower. So really, for my people, for the paid members, I would be looking at the chart and updating them. My sense is it's going higher because of massive buying, and that's something I didn't say when I was talking. How many more questions have we got?
Just a few, but we could switch back to your presentation. We only got about 4 minutes left.
Well, let's go with the questions.
Okay, excellent. Let's see here. You've kind of mentioned on the silver stocks you prefer. So Richard wants to know, 90% coins, bars, or ETFs, how do you invest in the silver space? What's the allocation? Yeah,
it depends on the person. If you remember, I have a document called How to Use the Morgan Report. It outlines it generally. But for the average investor, actually starting with 90% coins is actually the best. It's the cheapest usually. So your markup isn't very high and it's the most spendable. Not that you'd ever get to a barter situation, but if you ever did, it would be easily recognizable and easily accepted almost anywhere. So I say most families that are fairly well off have like a bag of silver. Right now, we're at about 24 times. So that's what $100 looks like in silver coins. There's 1,000 dimes in here. And so what is that? It's $100, right? So what does it cost in fiat? And the answer is 2,400. So every dime in today's fiat value is $2.40. So you can see as much as silver is bashed, it certainly does over longer periods of time pretty much maintain its value. Although, I don't want to misrepresent the fact that I've been saying it's still very undervalued, and it is. So a bag, and then you could go to bars because bars are so easy to track and easy to stack and convenient. But the thing about a bar, if you have a 100-ounce bar or a 1,000-ounce bar, is you got to make a big decision. So if you buy a box of Silver Eagles, for example, you've got 500 coins, 1 ounce each. So you could sell, a tenth of the box and still have a lot of sales ahead. Whereas if you make a bar, you got to make one decision and it pretty much has to be right. So there's that to consider.
Excellent. Our next question is your thoughts on the physical platinum shares?
Platinum, I'm favorable to. I wrote about it in the Morgan Report a few months back. According to the Platinum Guild, they stated that palladium is going to be phased out and platinum is going to be used for catalytic converters. There's a misnomer that palladium is only used for gas and platinum is only used for diesel. It's not true. Either one can be used for either gas or diesel. However, it does take a manufacturing change, and it's costly to redo the line, the manufacturing line, the industrial line. So I do think that will happen. I'm somewhat bullish on platinum. There aren't really that many good platinum stocks anymore. There is one you can look up over in Montana, and I forget the name of it. The Russians have a good percentage of it. And it's mostly a palladium mine, actually. So you could just type in best platinum palladium producer in the United States. You'll find it.
Excellent. We've got about 1 minute left, so I'm going to let you wrap up with closing remarks.
All right. Well, thank you. I would just suggest everybody get familiar with the website if they're not already. and just get on our free email list. And if you want to keep your anonymity there, I get it. You can sign up here. If you want to just cruise it, go to the blog. That's probably the best place to go. If you really want to search something that I've done in the past, there's a search feature up here. This is our YouTube channel. This is our Twitter feed, LinkedIn presence, Facebook. It's corporate only. There's really not much there. Over here, I paid for this silver watch list. Not everything that's on here is in the Morgan report, far from it. And we don't do just silver. We do gold, silver. We've got uranium that's really taken off. We have a asymmetrical trade that David will be talking about on his presentation. And this OwnX is a silver stacking program. LODE is a digital currency backed by gold and silver. I'm involved, so somewhat biased because I have an investment in there. And this is leasing gold and silver for very sophisticated investors of very high net worth. But it's from Keith Weiner, and I trust Keith, and something you can link to and get the information on. So no hard push. So I think that's it. TheMorganReport.com stems from that. Everything stems.
Excellent. Well, thank you so much. We appreciate your time today. It's been an excellent presentation, and we'll see you soon, David.
Thank you for having me.
And as a friendly reminder to the audience, you can replay this session and every session from the event by visiting virtualpath